What if I told you that the US dollar's reign as the world's dominant currency is ending right now, and most Americans have absolutely no idea it's happening? So while you are focused on inflation and interest rates, China has been quietly building the infrastructure to replace the dollar with the yuan as the world's primary reserve currency. And they're not just talking about it, they're actually doing it. Saudi Arabia is now accepting yuan for oil. Brazil and Argentina are settling trade in yuan. The BRICS nations are creating a currency bloc that could represent half the world's population. The financial order that's existed since World War II is crumbling, and what replaces it will determine your wealth, your country's power, and the global balance of power for the next century. Welcome to Financial Freedom Desk, where we expose the economic shifts that will change everything. Before we dive into this geopolitical earthquake, I need you to do something critical right now. Hit that like button. Because this video reveals information that powerful interests don't want widely known, and engagement is the only way we beat the algorithm. Subscribe to this channel and smash that notification bell, because the yuan's rise is happening in real time, and you need to understand each development as it unfolds. Over 82% of you watching aren't subscribed, and trust me, you're going to want every analysis we release on this historic transition. Now let me walk you through exactly what's happening, why it matters more than anything else in economics right now, and what it means for your financial future. Let's start with a fundamental question that most people never consider. What does it actually mean to be the global reserve currency, and why does it matter so profoundly? Understanding this is absolutely essential to grasping the magnitude of what's happening right now between the dollar and the yuan. A reserve currency is the currency that governments, central banks, and major institutions hold as part of their foreign exchange reserves. It's the currency used for international transactions, especially in critical commodities like oil, natural gas, and metals. It's the currency that global trade is denominated in, the currency that serves as the benchmark for exchange rates, and the currency that provides the foundation for the international financial system. The United States has enjoyed reserve currency status since the end of World War II, and especially since the collapse of the Bretton Woods system in 1971. This status has granted America what former French Finance Minister Valéry Giscard d'Estaing called an exorbitant privilege. What does that privilege look like practically? It means the United States can print dollars and exchange them for real goods and services from other nations. It means America can run massive trade deficits year after year without the currency consequences that other nations would face. It means the US government can borrow at lower interest rates because there's constant global demand for dollar-denominated assets. It means American banks dominate international finance. It means US sanctions have teeth because cutting a country off from the dollar system is economically devastating. But here's the critical insight that most people miss. Reserve currency status isn't a birthright or a permanent condition. It's based on confidence, economic fundamentals, political stability, and most importantly, the willingness of other nations to continue using your currency. Throughout history, reserve currencies have come and gone. China's strategy to elevate the yuan isn't random or haphazard. It's a carefully orchestrated, multi-decade plan with several interconnected components. Let me walk you through each piece of this strategy, because understanding the plan reveals just how serious and advanced this effort really is. First, there's the Belt and Road Initiative, which is probably the most ambitious infrastructure project in human history. China has invested over $1 trillion in infrastructure development across more than 60 countries. Ports, railways, highways, power plants, telecommunications networks. This isn't charity or a simple investment. Every Belt and Road project creates economic dependencies, establishes trade routes that flow through China, and most importantly, normalizes yuan-denominated transactions. When a country borrows from China to build infrastructure, that loan is often in yuan. When they export goods using Chinese-built ports and railways, those transactions increasingly happen in yuan. The Belt and Road Initiative is literally building the physical infrastructure for a yuan-based trading system. Second, China's been systematically establishing currency swap agreements with dozens of countries around the world. These agreements allow countries to exchange their local currency for yuan without going through dollars as an intermediary. This might sound technical and boring, but it's actually revolutionary. It means countries can trade with China, the world's largest exporter and second largest economy, without needing dollar reserves. Each swap agreement chips away at dollar necessity and expands the yuan's international footprint. Third, and this is huge, China's been making aggressive moves in the energy markets for decades. Oil has been priced exclusively in dollars, creating the so-called petrodollar system that's been a cornerstone of dollar dominance. If you wanted to buy oil, you needed dollars. Now let's zoom out and look at the broader geopolitical landscape, because the currency question isn't just economic. It's fundamentally about power, alliances, and the future structure of international relations. The BRICS nations, Brazil, Russia, India, China, and South Africa, have been discussing alternatives to dollar dominance for over a decade. Recently, this bloc has expanded to include Saudi Arabia, UAE, Egypt, Ethiopia, Iran, and Argentina. That's now 11 countries representing roughly 40% of the global population and about a quarter of global GDP. These nations have varying degrees of enthusiasm for de-dollarization, but the trend is unmistakable. They're increasingly settling trade among themselves in local currencies, with yuan often serving as the bridge currency. Russia's situation is particularly revealing. After being cut off from SWIFT and having dollar reserves frozen due to Ukraine sanctions, Russia had no choice but to pivot away from dollars. They now settle the majority of trade with China in yuan. They're accepting yuan for energy exports. They've essentially become a case study in how a major economy can function outside the dollar system, and they're making it work, which sends a powerful message to other countries. Dollar dependence creates vulnerability, and alternatives exist. The Middle East is experiencing a historic shift. For 70 years, the U.S.-Saudi relationship anchored Middle Eastern geopolitics and cemented the petrodollar system. That relationship is now strained. Saudi Arabia is increasingly pragmatic, maintaining relations with America while building deeper ties with China. The Saudis recently conducted joint military exercises with China. They're allowing yuan-denominated oil sales. They're considering joining BRICS. The United Arab Emirates is building yuan clearinghouses, which create a constant global demand for the currency. China has been systematically breaking this system. They convinced Saudi Arabia, America's longtime ally, to accept yuan for oil purchases. They're settling liquefied natural gas deals in yuan. They have created yuan-denominated oil futures contracts on the Shanghai Exchange. Each of these moves reduces the world's need for dollars and increases the need for yuan. Fourth, China has been accumulating gold at a staggering pace. The People's Bank of China has been a consistent buyer of gold for years, adding hundreds of tons to their reserves. Why does this matter? Because unlike the dollar, which is a pure fiat currency backed only by confidence, China is positioning the yuan as a currency supported by substantial commodity reserves, including gold. They're not returning to a gold standard, exactly, but they're creating the perception that the yuan has tangible backing, which increases its attractiveness as a store of value. Fifth, China's developed alternative payment systems to compete with SWIFT, the international payment network that currently handles most global financial transactions. SWIFT is dominated by Western nations and has been weaponized through sanctions against countries like Russia and Iran. China's cross-border interbank payment system, called CIPS, provides an alternative. It's not as extensive as SWIFT yet, but it's growing rapidly, and it processes transactions in yuan. Every country worried about potential sanctions now has a reason to integrate with CIPS, which means transacting in yuan. 6. The digital yuan project represents a technological leap that could reshape international finance. China has developed one of the world's most advanced central bank digital currencies, or CBDCs. The digital yuan allows for instant, low-cost international transactions without intermediaries. Let's engage in a thought experiment. Imagine it's 2040, and the yuan has become a primary reserve currency alongside or even surpassing the dollar. What does that world actually look like? And how does it affect ordinary people? For Americans, the loss of reserve currency privilege would be profoundly disruptive. The US government could no longer finance deficits as easily or cheaply. Interest rates would be structurally higher because foreign demand for treasuries would decline. Inflation would likely be higher because the US couldn't export inflation through currency printing the way it has for decades. The trade deficit would need to narrow, meaning Americans would consume less imported goods, and prices for those goods would be higher. Living standards would adjust downward as the economy rebalances. Political power would decline as the ability to impose effective sanctions diminishes. The military would face budget constraints as borrowing becomes more expensive. It would be a painful adjustment requiring significant changes in expectations and lifestyles. For China, reserve currency status would bring new responsibilities and constraints. They would need to run trade deficits to supply the world with yuan, the opposite of their current mercantilist model. They would need to open capital accounts and accept volatility that brings. They would become responsible for managing global liquidity, which means domestic policy would need to consider international implications. Financial markets would need to be open to foreign participants, reducing government control. Reserve currency status brings benefits, but also constraints that China might find uncomfortable. For the rest of the world, a multipolar currency system could actually be beneficial. Countries wouldn't face a binary choice of dollar or yuan. They could use both, plus euros, plus regional currencies, depending on circumstances. Before we wrap up, we need to discuss several wildcard factors that could dramatically alter this entire trajectory in unexpected ways. Technology is the first wildcard. Central bank digital currencies, blockchain-based settlement systems, and private cryptocurrency solutions could reshape international finance in ways we can't fully predict. If a truly decentralized, stable, globally accepted digital currency emerged, it might outcompete both dollars and yuan. Alternatively, if China's digital yuan proves vastly superior technologically, adoption could accelerate beyond current expectations. Climate change and resource scarcity represent another wild card. If China successfully corners markets for critical resources, rare earth elements, lithium for batteries, agricultural commodities, the yuan could become necessary for accessing those resources, creating artificial demand. Conversely, if climate disruption severely impacts China more than other regions, it could undermine their economic trajectory. Geopolitical conflict is perhaps the biggest wildcard. A serious military confrontation between the US and China, whether over Taiwan or another flashpoint, would dramatically accelerate the decoupling and force countries to choose sides. The currency implications would be immediate and severe. Alternatively, if tensions ease and a genuine accommodation is reached, the transition could be more gradual and less disruptive. Domestic political developments in both countries matter enormously. If China's Communist Party faces a legitimacy crisis or internal power struggle, confidence in yuan would suffer if the United States experiences democratic backsliding. The constitutional crisis or political violence, dollar confidence would erode. Leadership changes, policy shifts, and internal stability will influence currency trajectories as much as external economic factors. So there you have it, the complete picture of China's ambitious, systematic, and increasingly successful effort to elevate the yuan to reserve currency status, potentially ending nearly a century of dollar dominance. This isn't conspiracy theory or speculation. This is documented policy, observable infrastructure development, measurable trade pattern shifts, and clear geopolitical realignment happening right now. The question isn't whether China is trying to make the yuan a major reserve currency. They absolutely are, and they're making real progress. The question is whether they'll ultimately succeed, how quickly the transition might occur, and what the multipolar currency world looks like when we get there. The answers to those questions will shape the 21st century's economic and political order as profoundly as Bretton Woods shaped the 20th century. For everyday people trying to protect their wealth and navigate this transition, the key insight is this: don't keep all your eggs in one currency basket. The era of dollar dominance is ending, not because of conspiracy, but because of the natural historical cycle of rising and declining powers. China's rise and America's relative decline create conditions for currency transition. Whether you think that's good or bad almost doesn't matter. It's happening, and you need to position accordingly. Here at Financial Freedom Desk, we'll continue tracking this historic transition week by week. We'll update you on yuan adoption metrics, new currency agreements, shifting trade patterns, and policy developments. This is arguably the most important economic story of our lifetime, and understanding it clearly could mean the difference between preserving your wealth and watching it evaporate in a currency transition. Now, before you leave, I need 3 specific actions from you. First, hit that like button right now. This video contains analysis that challenges powerful narratives, and the algorithm will suppress it unless you engage. Your like literally determines whether thousands or millions see this information. Second, subscribe to Financial Freedom Desk and turn on all notifications. The yuan's rise is happening in real time with new developments weekly. You cannot afford to miss updates on the most significant currency transition in modern history, and we're building a community of financially informed individuals who see the big picture while everyone else focuses on daily noise. Third, share this video, send it to friends who still think the dollar is invincible, post it in investment forums, email it to family members who need to understand why international diversification matters. Information is power, and by sharing this analysis, you're helping people prepare for the coming transition instead of being blindsided by it. Drop a comment below and tell me, do you think the yuan will eventually surpass the dollar as the primary reserve currency? What's your timeline prediction? Are you already diversifying away from pure dollar exposure? I read every comment, and your insights often reveal perspectives I hadn't fully considered. Also, let me know what you want covered next. Should we do a deep dive on how to diversify internationally? An analysis of which countries are best positioned in a multipolar currency world? A breakdown of central bank digital currencies and what they mean for privacy and freedom. Your questions drive our content. Remember, financial freedom requires understanding the big picture trends that reshape the economic landscape.